Oh, I was kind of sleepy. Then I took a look at the charts this morning. We are at new all-time highs, ladies and gentlemen. At time of recording, Bitcoin is sitting around $65,952. When I woke up this morning around 5ish, 6ish, it was actually sitting somewhere around 66K. So, guys, we're starting the week off very, very strong, okay? As well as the rest of the markets, too. Oh, by the way, I'm Wade Teamer, and you're watching Digi Hustle News. If you're new, make sure you hit that like button and subscribe for me. But like I said, guys, the markets are looking fantastic right now. Crypto.com is actually up 16%. As a matter of fact, they have just been listed on Coinbase over the weekend, so I'm sure that helped, as well as some mainnet upgrades and some more developments to their DeFi wallet. So Crypto.com is doing well. Another project, KuCoin. KuCoin is also up 6% right now, breaking the $20 mark. Most notably, that has something to do with their metaverse relationship and the office in Blocktopia. And not to mention that KuCoin is just a pretty, very, very strong platform to use. And when it comes to crypto adoption, especially for the ladies, KuCoin is the number one place to go. So seeing KuCoin perform well, in my opinion, is a great indicator of market adoption, new people coming into the space, guys. But Senso also doing well right now, up 8%. VeChain sitting at 16 cent now, guys, up 6%. Chainlink's doing well. HBAR is doing well also. And Sia Coin finally broke that 1 cent range, guys. So markets are looking good. A coin up 5%, XRP, Litecoin also up 5% as well. Triple fives. That looks nice. Render is a token I talk a lot about on this channel, guys, and it is rallying. Okay, now this isn't the main piece of news that I have for you in this episode, guys, but I'm just going to share this with you really fast because this essentially highlights a point that I have been making on this channel for quite some time, especially when it comes to the Render token. Now, they have just announced as of this morning, they're actually live on Twitch right now as I'm recording this, making the announcement, but Render Network announces key integration with Solana and Metaplex. So what does this mean? Essentially, guys, much like I said, whenever I tell you about the Render token, okay, without graphics processing, without the technology to generate these characters, the metaverse wouldn't exist. Now, when the whole metaverse conversation sparked off, yes, this was one of the projects I had forgot to mention because we were so, we all got caught up in the hysteria. I got caught up in the hysteria. Not going to lie to you. That's why I followed up with the Ethereum and Binance video, because that was a point that needed to be made as well. This one was a point that I felt like I have made enough, but with this headline here, with this partnership, guys, this solidifies it. Okay. This definitely solidifies it. Render specializes in graphics processing. They just signed up with Star Trek's Gene Roddenberry to bring the whole Star Trek collection into the metaverse, into NFT form. Now they're working with one of the biggest metaverse players in the game, guys, and it only makes sense. Okay, Genopets is around the corner. They're gonna need some graphic processing power for that. Okay, but let's take a look at the rest of the markets, guys. Ethereum is performing very well, also sitting at 4,700. That's new highs as well for Ethereum. Of course, the next stop, in my humble opinion, is going to be 5,500. Much like I stated before, the chart is indicating that as well. And we have the top band range opened up here to give us that move, the room to move to 5,500. So I am very positive on the markets right now. Some more some more assets doing good, guys. IOTA, Digibyte, Uniswap. Of course, if Ethereum does well, Ethereum Classic will do well. ICP, guys. ICP has also been doing pretty well over the weekend, guys. We have, as a matter of fact, this is very interesting as well, guys. Bitcoin's major upgrade Taproot is set for activation. Now, what does this have to do with ICP? Well, if you know, ICP is bringing smart contracts to Bitcoin, okay? This Taproot upgrade is set to go live in the next 5 or 6 days. This will expand Bitcoin smart contract and scripting capabilities and improve privacy measures, reduce fees for multi-sig complex transactions, enhance wallet functionality. Also, improve privacy on the second layer solutions like Lightning Network. Okay, so reason why I showed you that, why it's relevant to ICP's move up to the upside, is because, well, Dfinity is bringing smart contracts to Bitcoin. On top of that, ICP just partnered with a major gaming partner. So now they're making their way into the NFT space, blockchain games, and the metaverse, guys. So ICP doing very well. Of course, Polkadot is also doing well, guys. NFT. Let's talk about NFT really quick, guys, because I saw this on the charts last night. Now, we've seen this formation before. Okay, we've seen this setup before, guys. We come down to our moving average for the particular asset. We make contact with it. It serves as a support level and we bounce off. So if you're holding Ape NFT, we may be in a position for something very nice this coming week, maybe over the rest of the month. Okay, but the technicals for Ape NFT look very solid, guys. But let me get into this main event. Okay, we're going to get right to the main event today, guys, because this is very important. The information around it is very important, especially if you are a crypto holder in the United States, guys. So as we know, Friday, the commander-in-chief POTUS, he passed. Well, he hasn't signed off yet. I believe that's going to happen this morning, but the powers that be, they have signed off on the infrastructure bill. Now, the problem is that within this infrastructure bill, there is a certain code, a certain statute, if you will, when it comes to taxing crypto. Okay. Essentially, this provision in the tax code is titled Section 60501. What this essentially is that is the name of the rule, that $10,000 rule. Basically, this is a rule that came into effect about 40 to 50 years ago. It was designed for large cash transactions. Okay, so to simplify what's happening to crypto, I can tell you like this: that same rule is going to be applied to crypto transactions. Okay. Now, I have found an article that really breaks this down fully, concisely, and in a way that we can understand. So that is what we are going to get into right now, guys. But like we mentioned, they passed the bill. Now, what are the new reporting requirements for crypto exchanges? Well, this is coming from Volt Equity. They are a Bitcoin friendly investment firm. The writer of this article is Nelson Heish. So this is a very reputable source, guys. That's why I wanted to share it with you. I was looking for something like this most of last night, but let's just get right into the important information here. New reporting requirements for cryptocurrency exchanges. It states that all cryptocurrency exchanges, Coinbase, Robinhood, etc., are now considered brokers, much like traditional brokers, Fidelity, Schwab, or E-Trade. Specifically, the legislation says that broker now includes any person for consideration who is responsible for regularly providing any service effectuating transfers of digital assets on behalf of another person. So, with this new definition, it simply means that if I were to start a platform, okay, let's just say a liquidity pool, and you guys were to join that liquidity pool, and maybe the asset involved won't be a DHN token or something like that. Let's just say, for example, we're using Cardano. Okay, I run this liquidity pool. If you were to go and withdraw from the liquidity pool, say there's a reward incentive and you are wanting to claim your rewards. If those rewards are anywhere near $10,000 or the equivalent of in US denomination, once you get your assets out, I would have to report your first, last name, social security number, address, all that stuff to the US government within 15 days of making that transaction. Okay, so That's what that means. Now, it goes on to state that, the term digital asset now has a definition, guys. The term digital asset is defined as any digital representation of value which is recorded on a cryptographically secured distributed ledger or any similar technology as specified by the secretary. Okay, so this has been cause for debate, okay, especially over the weekend. Now, people are stating that this term is too loose. But if you understand blockchain, distributed ledger technologies, and cryptographic systems, this makes perfect sense. Fortunately, that's what we're going over in school. So I can tell you what this means, guys. Essentially, any digital representation of value, that is stable coins, cryptos, security tokens, privacy tokens, NFTs, stuff like that. Any digital asset that represents value falls under this statute. Okay. That is not cause for alarm. That actually makes a lot of logical sense. Okay. Now, digital assets carry the same legitimacy as the stock market. Okay. Now, of course, depending on who you ask, how long you've been in the financial world, you know, yeah, things are manipulated, things are rigged, so forth and so on, exterior influences. This, on the surface appears to allow for those same things to happen to crypto, but it's already happening. So, again, I don't see what the big stir was about. There are other crypto channels talking about cryptos being canceled, DeFi is under fire, so forth and so on. Of course, that's the people rush to make summarize things when they don't understand them like that. Okay. I was very, very taken back by the crypto YouTube space this weekend after all of this came out. But guys, continuing, digital assets are treated like securities, similar to stocks, bonds, and other certain types of commodities. The securities, okay, this has been an ongoing area of debate whether to classify cryptocurrencies as securities or not. So this reporting requirement finally gives some clarity. Digital assets will be treated like securities in terms of capital gains and losses. This was already something that had been established since 2014. As a matter of fact, guys. So in the past, he states digital assets were classified as property and thus were taxed based on gains and losses. So the tax treatment of digital assets is essentially the same as before. You must pay taxes on your capital gains, guys. So that means that, okay, using the example from earlier, you go and you exit the liquidity pool. Your rewards are in excess of $10,000, maybe $12,000, $13,000, right? So what you're being taxed on is, let's just say your initial investment was $2,000. Okay. That from that point, what would be considered taxable is the 8 to 10,000 that you made off of the $2,000. Okay. That is how that is going to work. Now, of course, they go to state that securities also face regulation from the SEC, and this legislation makes no mention of the SEC. Traditional securities like stocks force companies to file quarterly reports, provide a prospecting detailing risk, and more. And he goes to ask, will cryptocurrencies ever be required to file similar documents with the SEC? Now, that begs the question, what's the whole Ripple situation about then? If we have clarification that digital assets are treated, they will be treated like securities, similar to stocks, bonds, and certain types of commodities. XRP is a digital asset, right? So the whole situation of what's going on between the SEC and XRP, this statute here is going to play a very large part in the conclusion of this situation. Okay. So for my understanding, the whole issue right now that the SEC has with Ripple and XRP is that they sold XRP and treated it like securities back in 2012, 2013, I believe. Okay. But this definition treats all digital assets such as like securities. Okay. Now, keep in mind, though, none of this stuff will go into effect until January 1st of 2023, guys. And what will have to happen when this goes into effect, the form, okay, 1099B is going to be very important. You're going to see that form a lot. That's proceeds from a broker. Okay. But another form that you are going to see a lot is called the IRS form 8300. Reports of cash payments over $10,000 received in a trade or business. Okay. This is the section, the code, the title of the legislation that people are the most messed up about. Okay. This is essentially going to, of course, from the IRS perspective, help combat money laundering and tax evasion, drug dealing, and all this other stuff, right? But how this applies to you is if you were to get into a transaction and the value of it was $10,000 or more to the equivalent of cash, you would file this form 8300. And of course, on the form, you would need to put the name, address, TIN of the person who received the cash and the amount of it that was received and the date of the transaction. So that, to me, guys, I'll tell you like this. I've never moved $10,000 in cash at one time. All right. I've never done that. So I can imagine that people who do that frequently, one, are used to filling out that form. Okay. And two, if it's something that has to be done from a legal perspective in order to protect your finances, I don't see necessarily the problem. I understand the intrusion. Okay. I understand the intrusion. I understand that the whole philosophy behind crypto is decentralization, personal independence, financial freedom, so forth and so on. I understand that, right? But we're talking about the next generation here. We're talking about the next generation. In order for cryptocurrencies to truly usher in that revolution, that renaissance of financial independence, it has to be looked at the same way as the former money. It has to be looked at it that way. Okay. So with that being stated, guys, let's go over to some very important dates and look into when this is going to start coming. Now, the reporting requirement doesn't take effect until January 1st, 2023, thus affects tax returns filed in the corresponding year, 2024. This means that this year and 2022 will be exempt from these reporting requirements. This means that exchanges are not required to send you Form 1099B until 2024 for the taxes of 2023. Although we would expect that exchanges will start complying earlier. So essentially, guys, in the next few months or so, maybe eight to 10 months, you're going to be receiving a 1099 form from Coinbase or crypto.com. Now, some of the things that are not clear, okay? Now, this is, of course, what the form will look like. And I remember seeing this, guys. When we had the conversation about why all the crypto regulation, it was because I saw a line like this, guys, highlighted in this red box here. It's because I saw things like that. At the time, during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest on any virtual currency? That was the best way that they could describe it in 2020. Now, when we get this form in 2023 and 2024, it's going to specifically say, have you bought, sell, traded, or exchanged crypto assets or digital assets like such and such and such and such? Okay. So that is what is going to stem from this. Now, of course, there are a few problems, and I have a few questions as well, because, of course, how it is written, it just states that $10,000 is a trigger point. Okay. But one thing I want to ask is what happens, because something I've noticed with crypto in general, the first time you make a transaction on a particular exchange, that transaction never gets erased. It never goes away. So are they looking to tax from that moment, that first transaction you made? if and until you reach 10,000, or are they looking for one-time transactions in excess of 10K or more? Okay. It's still uneasy, and there's a lot to be discussed about it, but I wanted to give you guys the at least the base layer so that way you understand what's going on. Okay. No, this isn't an attack on crypto. It isn't an attack on DeFi. What this is, in my view, is bringing crypto into legitimacy. Okay. It's going to make it just as reputable as the fiat system. Okay. Now, getting any deeper than that, you can go ahead and define what fiat is compared to digital assets. I mean, they both are created essentially. So, this to me only makes sense, guys. It only makes sense. But like I said, my question is, does this go back to when you made your first transaction, or are they looking for 10,000 or more in one single transaction? But again, guys, none of this we really have to worry about until the end of 2022 going into 2023. Okay, so that means that everything gained in 2021 and looking forward to be gained in 2022 will be non-taxable. And to me, that seems that would mean there's going to be a surge. There may be a surge of an influx of money coming into the crypto space of people possibly looking to capitalize on 2022, with it being the last year that you can essentially not register your gains. Okay. Because the law is still there. You still have to pay taxes on your capital gains and losses from stocks or investments of assets. But now there's a specific requirement for crypto holders in general. Okay. So it's a murky situation. Some people don't like it, others do. I personally see it as a necessary evil. It has to happen in order for us to really pioneer the future. Okay. To make our place in this phenomenon that we call cryptocurrency last forever. Essentially, guys, last forever. But as this stuff evolves, we'll talk more about it, guys. I just wanted to break this down to you. I felt that this was the most pressing issue, especially starting the week, guys. But like we saw before here, guys, the markets are looking fantastic. Everything's in the green. Bitcoin is getting ready to pump majorly. You can see here on the RSI on the daily, we have a lot of room to grow. We are nowhere near oversold. So Bitcoin, you can expect Bitcoin to continue this upwards momentum. Let's see where we may be stopping today. It looks like 67, 68 may provide us with a little bit of resistance, a little bit of pushback. But if you go over to the weekly, guys, you'll see we're not stopping until 80K. As the weeks progress and we get closer to the end of the year, the technicals are now starting to show me that 80,000, 90,000, 100,000 is totally possible. Is totally possible, guys. But again, just reiterating, it's a great start to the week. Our favorite coins are pumping. Some developments are coming into the space. And as we enter Q4, well, we're in Q4 now, but as we progress through Q4, guys, it is shaping up to look a lot like what we are accustomed to when it comes to Q4. People are rushing into the markets. They're looking to get their position. The sentiment outside of crypto, we're going into the holiday season. Shopping's on everyone's mind, so forth and so on, guys. So the love is in the air. The love is in the air, guys. Simply put, the love is in the air. But if you found value in this video, of course, you know what to do. Hit the like button, subscribe, ring the notification bell so that way you never miss an update. If you want to get in contact with me directly, of course, links will be in the description, or shout out from the comment section. I will be standing there. So with all that being said, guys, I want you to have a great Monday, have a prosperous Monday, and most importantly, a maker of this lettuce. It's money. I'll see y'all in the next one.